to get rid of your IRS tax debt. You're thinking, offer and compromise. I want to get rid of this darn thing. Of course you do. You don't want to be dealing with the IRS for years upon years upon years. Nobody does. So one of the misconceptions is, I'm going to come across a lot of money. Let me just throw it at the IRS. I want to settle it, have them settle it out. Unfortunately, it does not work that way. There's multiple steps, and it is a very legal process with the IRS. One of the most important things that you must consider when it comes to offering compromise is, when does the balances completely fall off with the IRS? This time of law is known as the Collection Statute Expiration Date, also known as the CSED date. It is one of the factors that holds key that you must consider. Now, to break it down to you, let's go back and just engineer a tax debt with the IRS. People owe for many various reasons, whether you file your return and have a balance due, or if you filed a return, things went easy and all of a sudden you went through an audit and all of a sudden you owe because of the audit, or there are times you went through like a different proposed assessment, like a CP 2000. Once that procedure gets finalized, or once you file, once you owe, once the debt is processed with the IRS, that is when the time starts ticking for the 10-year time frame, when the IRS will no longer have a right to collect. Now, let's further break the CSED down. If you happen to owe for multiple years, each year has its own CSED date. And I'll throw this curveball. Let's say you owe for tax year 2020, 21, and 2022. For 2020, let's say you filed on time, everything was smooth, and you filed as of April 15th, 2021. That's when the 10 years starts ticking away. But for tax year 2022, let's say you filed, everything was good, everything was normal, there was no issues. And in April of 2024, an audit finished. And now all of a sudden, you owe $50,000. Now, because the audit concluded in April of 2024, that is when the 10-year time clock starts ticking, and the whole balance will be written off by the IRS in 2034. 10 years from then, you have staggered CSED dates with the IRS for the different years of balances you owe them, which is why a tax professional doesn't say, yeah, we're going to do an offer and compromise for you without really knowing the collection statute expiration date. And also keep in mind that there are certain events that actually extend the 10-year time frame the IRS has to collect. These events are known as a tolling event. Such tolling events could be if you go through bankruptcy where the taxes were not discharged through bankruptcy, you had a tolling event. Also, a CDP request, also known as a collection due process request with the IRS, is another tolling event. And in addition, if you happen to go through an offer and compromise that got rejected and it failed, that is also a tolling event. So you're going to have updated CSEDs the moment you're out of those procedures, and typically it's extended throughout the duration of that procedure plus an additional 6 months, which is why a key factor, if you have financial hardship, the two other programs that are based upon your finances are the non-collectible and the hardship payment plan. Those two are strictly around the statute dates. Because the statute date is right around the corner, you may want to look into one of the alternative solutions instead of the offer and compromise program.